whole host of issues and how you should be approaching this market. But let's get back to tracking companies now.
Just before you move to the next earnings, Divi's Labs, just pull out the chart.
52-week low.
5% down once again now on that stock. These, you might want to call some kind of overreaction, but this is a very tough market. I mean, with this earnings, last year Divi's would have gone up, but this time the markets just focus on the fact that they're not giving guidance and the fact that this could be peak earnings. The concept of peak earnings is a very powerful one for a lot of stocks, and that perhaps is the reason that even after opening higher, the stocks once again seen a bit of a decline. Maybe overreaction now, but that's what the market does.
So it's what, 15% gone now in less than 2 days,
yes.
right? I mean, and we're not even done with the second day. So let's see. It's been quite weak for Divi's Labs there, 52-week low. But Bosch is another company that has posted a weak set of numbers. The company saw a big EBITDA margin contraction of 600 basis points, which led to a 27% slide in profits. In terms of the segment as well, the auto business was muted, but the non-auto business clocked in a strong growth. Soumitra Bhattacharya, the managing director of Bosch and president of Bosch Group India, joins us now to talk about that. Soumitra, thanks a lot for joining us. These margin pressures are something that the entire industry has faced, but want to understand from you, how are you battling it? Do you see the margins get worse in FY23 because of the raw material cost pressures?
So thank you, Sonia, for having me on the show, and thank you, Anuj. I will have to make a small little correction on the statement that you made, Sonia. Factually, you're right from the numbers, but we have to look a little behind the numbers. So first, if we look at FY 21-22, in FY 21-22, you see, for example, profit before tax at about 1,500 crores, and that's about 12.7% of the turnover. Now, if you looked at the same number last year, we were 1,300 crores approximately. So we need to look at the broader picture of the full year, and we also need to look at the quarter, but again, understand what happened in the previous quarter. The previous quarter, as I mentioned also last year, at 16%, which we had, for example, for EBIT, had multiple one-time impacts. And if I take out the one-time impacts, it's more like, sub 10% against, without taking the one times, about 11.5% for this quarter, which is reported as 10.5. So in summary, 1,500 crores profit in 21-22 against 1,300 the previous year. And the quarter to quarter has an aberration because we had an aberration of one times in the last quarter. Having said that, in terms of margins, it's very important to understand, as y'all were speaking a little while ago, the market is undergoing a huge shift, not just in automotive, but also everywhere, on inflationary trends, on raw material price increases, on electronics price increases for automotive, and also on logistic price increases. Most companies, not just us, are unable to pass on all these cost increases to in our case, the OEMs, and B, then to finally the consumers. Of course, there has to be a healthy win-win of absorbing and also passing on right up to the consumer. But right now, India is struggling, including the world, on huge inflationary costs, and it directly comes from the three elements that I mentioned.
So, Mr. Bhattacharya, yes, I take your point entirely. It's very hard to pass on costs, especially when the demand environment is so challenging. That brings us to the next question, right? If it's hard to pass on raw material costs, if there is so much competition and things are evolving with respect to this transition to electric vehicles, you have given a guidance of 15% revenue growth for FY23. You think it would be a challenge to meet that?
Again, a very good point. So first, I'd like to state, what I mentioned in the con call. We have given, I would not say a guidance because we don't give a guidance, but an indication that FY 22-23 should be a 15% increase over the previous year, which is FY 21-22. Now, we have considered the current business situation. A, for example, right now the chip shortage continues. B, there is a possible outlook in the fiscal year in the last 2 quarters for a improvement over the current basis. So I have to, make it very clear. improvement over the current base, not becoming normalized, but an improvement. And this, as we all know, the world is suffering from the chip crisis, and the world is now suffering also from those elements that I talked, raw materials, electronics cost increase, including logistics cost increase. Now, keeping all this in mind, why have we stated it? We've got a very good acquisition bag on our powertrain, including for the BS6, stage 1, and we expect also when the stage 2 we get it, there also we'll have a very good. We are growing very well in the automotive aftermarket, which I mentioned, and profitably, and we are also doing very well in the power tools. And these three constitute the big ticket items for the listed company. Of course, Sonia, you must remember, we, of course, in the markets only speak about the listed company, but you must remember Bosch in India is 15 legal entities. And Bosch in India is much bigger than just only the listed company.
Got that. So,
for example, the listed company this year had a turnover of about 11,100 crores. Bosch in India would turn out a total turnover of the fiscal year approximately of 22,000 to 23,000 crores, and which will grow substantially much more as Bosch Group next year.
Oh, absolutely. That point is taken. Soumitra, hi, good morning. The issue is that supply side issues can remain for some time, but if demand is strong, at the end of the day, near-term weakness aside, company should be fine. So at least on the demand side, are you seeing enough traction?
Again, Anuj, it's a very good question. So let's take demand and supply broken up into market segmented approach. Yeah, because if you have a generic answer, it would not fit what you want to know. So let's start with pass cars and utility vehicles. The peak in 18-19 for pass cars, if I remember correctly, was around 4 million. In FY 21-22, we could, as an industry, meet the 4 million had it not been for the chip shortage. We touched a figure of about 3.65 million. Now, my guess, in spite of the chip shortage, the industry should be touching 4 million at best, and with risks, maybe 3.8 or 3.9. So there is a healthy demand. The chip shortage is not crippling the industry, but the chip shortage is definitely not allowing the industry to grow as much as it could. For example, without any chip shortage, I would have given a guess that we would have reached the peak already in FY 21-22. Let's take heavy commercial vehicles. That's a different story. It's not just a chip shortage matter. The peak in 18-19 was 540,000. Yeah. We have touched 280,000, a major increase on a very low base. But when are we going to touch 540,000? I think it's going to take many years because, our roads have improved, the tolls have been taken out, and the axle bearing capacity have also improved. So we have to look at the mix. Let's take light commercial vehicles. The peak in 18-19 was about 740,000, if I remember rightly. And we are still about 200,000 away from it, while our e-commerce is moving. And while there's a healthy mix of gasoline and diesel, over time, in the next years, also electrified LCVs will be seen. Let's take two-wheelers. There's a good demand, but very interestingly, sometimes for the higher end bikes. When I say higher in India, the standard bike is 125 cc. And the peak of 25 million is yet to be touched. And we are somewhere at 17 to 18 million.
Okay.
Three-wheeler had a major impact, the 1.2 million three-wheelers and currently at 750,000 will take a long time because of COVID. And finally, tractors, a very good situation where we actually touched the peak last year, crossing the 9,60,000 mark against the peak of 9 lakh in 18-19.
Okay.
And I expect on a high level that to remain constant, especially if we have a good monsoon.
Okay,
so
we will leave it at that.
Summary,
thanks a lot for joining us. That's the word coming in from Bosch. Appreciate your thoughts on the industry as well as on the business. Have a great day. We'll slip into a quick break on that note. Up next, we'll connect with Pinakin Parekh of JP Morgan to discuss the impact of that